Justin Pulitzer is my Twitter handle, and this purpose of this video is to discuss the Apple trade that was set up today and what's going to happen going forward. So the initial tweet basically started out saying Apple bounced off the 61.8% Fibonacci out of the recent range, 50 MA, and hasn't taken out the overnight lows, and that's the bogey for longs to look at here. And I also had mentioned that Apple's $93.98 is the level to crack for the bulls to get higher high off of a higher low intraday. I also had mentioned the follow-up to that trade, which was the exit point, which is that if long Apple on my call trims some up at the VWAP, which was 94.60-ish. At the time, it was actually 94.61, but I had wanted to allow for some execution, particularly if people were trading based on the call. Maybe they wouldn't be able to get the exact number, because sometimes it happens to hit there very quickly, and the market makers kind of smack it. So let's get into it. So the initial bias coming into today is that Apple had been in a uptrend here, and it came up. This uptrend comes all the way from the earnings gap lows, and we all know Apple split, so it's obviously price adjusted here. So before Apple had this last leg here, the relevant low that was of the range is $89.65, and I think everyone had been thinking we were going to get to 100 right away, but we fell short. I guess there were some anticipatory sellers, and they started to unload at $99.44. So since then, the stock has come down, and right over here we snapped that uptrend. So we now have to start thinking where is the point to where it's going to stop and where we're going to buy. So we happen to have a confluence of levels here that are relevant, and the big ones being the 50-day moving average, which is this red line, and this green dotted line, which represents the 61.8 Fibonacci level from the recent range. Apple is a stock that tends to respect technicals very well, and of course, as we all know, the 61.8 Fibonacci is the one of the big boys of the technical analysis. So let's dive right into it. Intraday, what are we looking for the setup? So let's go to a 1-day, 5-minute, and take a look. So Apple was down pretty hard pre-market with the rest of the tape on this Iraq news, and the low there had I guess just eclipsed this 61.8 fib level, but the relevant level here for the purposes of this video is 93.25. So the market had its recovery, and swiftly after we opened, Apple had a bit of a tumble here. And the point that's the important reference is that Apple's low here in regular trading hours never took out the pre-market lows. So you came down here and the low was 93.28, but it still never got below that low. So what are we looking now for? We're looking for Apple to have a reversal here. And what do we need to see? We need to start seeing a stock intraday make higher lows and higher highs. So Apple rallied back up and had these two hammer doji reversal bars and then fell back. So that's the relevant level to get over. And if you take a look, the high of this bar is 93.98, and that's the one that I had mentioned in the tweet. So you'll see Apple comes down here, and we're coming down now. We're making higher lows. See this low? This low is a little higher. This low is slightly still higher, and now we're coming up. So if we get through there, I'm thinking that we're going to now have a higher high. So once we clear there, bam, you get your price action, and we have to now start thinking about where we want to exit. So where are the points? Usually that's if you get a gap fill, which we didn't have here because Apple didn't gap. It opened up basically fairly flat, so that wasn't on the table. But what was the volume weighted average price, also known as the VWAP. So Apple came up here, and you can see it actually tagged the VWAP to the point perfectly. At the time, the VWAP was right here. It tagged it, and then it actually did have a pullback here, and then we spent time treading water around this level after which. So the call here was to buy this breakout here for the higher high, and then to sell up here at the VWAP. So it would have been a cool pocketing of, my call was to sell at 94.60, so you'd have pocketed yourself a cool 62 cents. So this is a trade setup that you guys can take a look at and do on your own, with or without me. And the key relevant points here is to start out with a bias that you're looking for a technical setup, and in this case it was buying off of a 50-day moving average or buying off the 61.8 Fibonacci. Now, I want to just show you one more thing. If you take a look at Apple, oops, we're around. Yep, oh, this shows, by the way, here was the earnings gap, and here was that uptrend that got snapped here. So let's take a look. This is the summary. Oops, got a little bit too much there. So if you take a look here, I know a lot of people get very hung up on, I see on Twitter all the time, oh, the 50 MA snapped and this and that. Yes, I understand that's an intraday issue. It has to close below there to have the bearish pattern. It's very, very common, again, to come knife through the 50 MA and then have one of these reversal candles, this huge, this bottoming tail hammer. And if you take a look, none of the body ever got below here on this 50 MA. So the setup was looking to buy the 61.8 fib, which you could have bought. That's also a very valid setup, but I often notice that you'll sometimes get an overshoot, so I like to see the actual reversal pattern form. And that's when I'll shift over into that intraday chart. So you go into the intraday chart and you look for your entry. The relevant points again here were that we never got through the overnight low. This low was higher, and we were looking for a higher high off of this bounce high for the breakout, and that came here in the form of getting over these two little dojis, and then looking to sell up here at the at least some of it up at the 61.8. I'm sorry, at the VWAP. Sorry, up at the VWAP. So now what? So let's go back to our daily. We'll go to a 6-month in this case. This is still too long of a time frame. Okay, so the next trade would be, well, let's take a look actually previously what happened the prior day. So this was the day that the stock went ex-dividend. So you'd actually expect the stock to be down on that, but Apple did something very funny. It sort of ran up, it pinged over here on the 20-day moving average, and then put in this topping tail, this ugly reversal type of a bar. It actually engulfed a couple of days worth of trade and then came back down. So what happens here? Usually, if you have opposing tails, and that's what this is, today's opposed. That's not. Here we go. Today's tail was an opposing tail, so what we'll do is we'll go with the second one. If this was reversed, we would go with this one, but we have a bottoming tail here. So the trade for Monday would be to buy Apple up over this high, and that's 94.82. So that's where you would want to set your buy stop, in the thought that Apple would then come rally back up. And I guess we'd probably be looking for another test of this this area up here. And I would think somewhere between 95.33 and this 20 MA, which is 95.84. So I hope that helps you guys see the rationale of the trade that was put on today. I know there was a lot of interest in it, and I always value you guys' feedback, and I really hope that you send me some comments and questions, and I'd be happy to answer them on the stream. Once again, my Twitter handle is @JustinPulitzer. All right, guys, have a great weekend.